Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better position your portfolio. You know, we continue to receive lots of calls every week from our radio listeners about the economy, and now obviously Europe has been in a bad situation for probably over 3 months really on the headlines. It's been a longer term scenario than that that's unwound. And really Europe and countries like Greece, Italy, Spain, Portugal, and so on are really no different than the United States. These are debt-ridden nations, and unfortunately, when you overspend, you have to pay the piper one day. I have no doubt in my mind that Greece will default. It really is when. Now, maybe the European economy or the European officials or politicians or countries will come and bail out Greece. The problem is it's not just Greece, it's other countries besides that. Again, I go back to long-term debt. Structural debt is not good for growth of the world economy, not only the U.S., but of course other countries outside the U.S. Countries that are doing well relative to not having a lot of debt or no debt at all. You know, countries like India, countries like Brazil, countries like China. You know, these countries really have low debt to GDP numbers, and this is going to help them, I believe, on the long term. Now, on a relative strength basis, we do not own any of these right now, and the reason we don't is because they basically triggered sells in our intermediate and long-term market trend indicators. Not to mention they fell out of our relative strength rankings within our portfolio. And the reason we use an investment strategy and we follow a disciplined approach, it helps us alleviate and reduce some of the unwarranted risks and the huge downside often that investors see in portfolios. As we looked at 2008, market trend indicators like what I talk about, our intermediate and long-term trend indicators that we use with inclined portfolios, help really alleviate those 40 or 50% downswings in a portfolio. Our relative strength indicators basically would change our portfolio and put more safe assets or assets that are relatively strong compared to the equity-based stock market. What I'm telling you is this: portfolio changes are more important than ever. And I think too many investors unfortunately have this mentality of buy and hold, which is, you know, you sit down with that advisor, he lays out 5, 6, 7 mutual funds or a basket of stocks or some bonds, and you basically kind of put those in there. You talk to that advisor once or twice a year, and maybe you do what's called a rebalance. But you never really, that portfolio is never really managed for downside risk protection or really upside potential. And that's really where the investment strategy comes in. Blindly buying, you know, 7 or 8 mutual funds or a variable annuity or an annuity or some stocks and just kind of letting it set and forget it is really going to be a risky strategy. If you're in a secular down market, which I believe we're in, and we have been really for over 10 years now, that strategy has not worked. By using something called relative strength, meaning sectors that are relatively strong, whether that is the U.S. stock market or pieces of the U.S. stock market, whether that's gold, whether that's bonds, whether that's international stocks or emerging market stocks or currencies or precious metals. Looking at the relative strength in a portfolio basically will take away the emotional decision making or the lack of any decision making because you're a buy and hold investor, and automatically makes you update that portfolio into the now and current areas that you really need to be in. Relative strength investing has been around for a long time. Relative strength investing, in fact, we did a major research on this particular subject, and that's why it's part of our portfolio. And all of our back testing back to 2003, and actually before using our market trend indicators, but just using relative strength and basically upgrading to a special formula that we have basically put together and back tested through many different scenarios, has worked exceptionally well compared to the S&P 500. Most money managers, in fact, it's estimated less than 10% of money managers outperform the S&P index, the S&P 500. Using our relative strength back testing strategy and formula, going back to 2003, it would have produced a return 4 to 5 times the percentage of the S&P 500 with less risk and volatility. So really, relative strength investing is very relevant today. And this again goes back to making these changes to a portfolio and being in areas that truly either are defensive when you need to be defensive or more growth oriented when you need to be growth oriented, or more important than ever. I continue to talk on my radio show about making changes to portfolios. We continue to hold a large amount of cash, which we've raised because of our intermediate and long-term market trend indicators and our relative strength. We continue to hold asset classes like certain types of bonds and gold because of relative strength. I believe that has really helped us basically keep away some of this volatility, and really gives our clients the opportunity for that upside potential and income they're going to need for the future. I hope this update video was important to you and helpful. And just remember, there's a lot of turmoil out there right now. We have a very cautious stance on the overall market. Hence, our indicators have told us that, and that's why we are holding a large amount of cash. Our market trend indicators can change at any time. We look at these daily. We also look at our relative strength. We look at our investment strategy. We want to make sure that not only are we looking for that upside potential, but risk management is important today. Folks, if this turns out to be another 2008 credit crisis that unwinds in Europe, you're going to be glad you had risk management within your portfolio. I would suggest most investors take a hard look at their portfolio, really make sure that you have an investment strategy that protects on some of that downside risk, and make sure, if you especially are an income-oriented investor and retired and living off your portfolio, you have at least a 5-year predictable income stream in that portfolio. I fear that we could have a big down leg in the markets if Europe truly unwinds and these politicians in these countries do not get that fiscal house in order. Until Sunday's show, make sure you have yourself a profitable week. And as always, call our office. We have offices throughout Florida. Call us. Let us help rebuild your portfolio. We do have a special program right now available for smaller investors that have investment portfolios under $1 million. So if you have a portfolio under $1 million and you'd like to talk to us about hiring our firm to manage your wealth, we are taking a limited number of people under $1 million right now. Call our office. We'd be more than happy to talk to you. And as always, if you'd like to have a complimentary investment review, call our office, talk to us. Let us get you back on track. Sleep at night. Be safe. Make sure your retirement's as good as it possibly can. Call our office. We'd love to help you. Until Sunday's show, have yourself an extremely profitable week.